nobody knows exactly how it's gonna work and the speed's gonna work, but I think it's very fair to assume that in some time, all the services related to insurance will be powered, if not 100%, but at least supported by AI.
Welcome to the Elevating Leaders series, where we go beyond the headlines and straight to the people who are redefining Insurtech and business transformation. We've caught up with the visionaries and the pioneers that are currently driving the industry forward, bringing you exclusive insights, strategies, and stories you won't hear anywhere else. If you're ready to go deeper, this is your front row seat to the future of insurance. I'm Miguel Edwards, and this is 5 Minutes.
Matheus Riolfi, thank you so much for joining us here at the 5M studio. It's great to have you again. We were downstairs on the show floor.
So thank you for having me. It's good to see you again.
So, wanted to jump in on a couple of topics, but I think it'd be worthwhile first, starting with, company you founded, Tint. What's the value proposition? What do you bring to the market?
Yeah, so Tint is an embedded insurance platform. So we help brands and insurers to sell insurance products as part of a larger service, as a larger platform. So for example, we work with a company called Turo, and then through their platform, we can sell commercial auto insurance to their fleet owners.
Got it.
And the advantage for the brand is that by offering insurance, they not only make more money, it's a new revenue stream for them, but they get the quality, the value of the platforms to go up. They can increase the loyalty of their customers. They can increase the retention, and they can also make their products much better than they were before. So it's really embedded insurance, or making insurance a feature of a platform really helps kind of the software companies increase the value of their products.
Got it. You use the term embedded insurance. I just want to double click on that because I think most of our audience is familiar with more of the traditional ways of distributing insurance, where somebody actively says, "Hey, I need an insurance policy. I'm going to go get it." Versus the concept of embedded. Can you dive into that a little bit?
Yeah, of course. The idea of embedded, it's somewhat similar to affinity, which is a name that has been used in the industry for a longer time. But embedded insurance, I would say, is a term that is about 3 years old or so. But it's this idea though, when insurance products become a feature of a larger product, not a product in itself. So when you think of, for example, if you buy a policy with Geico, you have the Geico app, you have the Geico product. So everything is really Geico or auto insurance centric. Or in the case of embedded, typically the insurance is just one of the pieces of a larger experience. So another example is we have a customer called UShip. So you can ship anything on their platform, a car, a couch, or whatever you want. So as you're booking your shipper, you're booking the transaction, you get offered to buy shipping protection. So basically you're shipping a car. If there's any damage to your car while it's being shipped, you can get that for $50, $100 extra. You will get paid if anything goes wrong. So that's a good example when the customer doesn't have to look for insurance elsewhere. It comes as part of the experience. And from a UShip perspective, as a shipping platform, it's just another revenue stream they have in addition to their core transaction of shipping your car.
Yeah, got it. No, that makes a lot of sense. That makes a lot of sense. I would be remiss, Matheus, if I didn't ask you about your perspective on AI, because it seems like it permeates every conversation here at ITC. So what's your perspective on AI, and if applicable, how does it fit into your platform?
Yeah, AI and what we're seeing, especially with Gen AI, is definitely transformational. So Tint, our domain is tint.ai. So we have been doing AI, but more on the machine learning side for underwriting for the last 5 years or so. So we were one of the early adopters of the kind of AI for technology. Obviously, now we have Gen AI as a completely new wave that is coming, and that's definitely going to be transformational. I think nobody knows exactly how it's going to work and the speed's going to work, but I think it's very fair to assume that in some time, all the services related to insurance will be powered, if not 100%, but at least supported by AI. A lot of the claims management would be. So the way we see it and we approach AI is that we use it across the different parts of our platform to help us be more efficient, help us launch products faster, cheaper, and then support policies faster and more efficiently as well. So we are now already using some of those tools, or our engineers use that for coding and to code faster.
Sure.
We are starting to use for some of the customer support as well. And I believe that in a few months we're going to see more and more. What I don't know, and I think that's people keep saying is like, can you now create a company with one person? Can you build a full MGA with one person? Like that, I don't know. Maybe. I don't believe it's going to happen quickly.
Sure.
But if you over time, I think we can see a completely disruption of the insurance model or how insurance is served because of AI.
That's fascinating, and it's funny because I think about using AI for next logical product, et cetera. But if I kind of take a step back and I think about the concept of embedded insurance, how do companies interested in building an embedded insurance kind of offering, how do they think about finding market opportunities? What's the approach to do that?
Well, the best way is when the customers of those companies are already asking for it. So we have many customers that they come and say, well, half of my customers are asking for a special type of protection, and they're asking me, why can't I buy that through your platform? That's the holy grail. That's when they are very, from a sales perspective, those brands are very late in the funnel. We can convert, launch something with them, and there's a high probability of success. We've seen the other extreme as well. Unfortunately, when some companies, they don't really have a use case, there's no intrinsic risk that is part of their flows, and they're trying to do some embedded insurance product. That, for the most part, doesn't work.
Okay.
Because just the fact that you have somebody's attention, it doesn't mean you can sell them insurance. Like I heard an extreme example of a company in the past that they were doing outsourced customer support for, I don't know, an airline or whatever. And towards the end of the call, the person would offer, by the way, do you have health insurance? Like that has absolutely nothing to do with this. So that is obviously an extreme example, but it is a real example that obviously doesn't work. Surprisingly enough, they were able to sell some policies, but as you can imagine, it's not a high one. Now, when the risk is intrinsic to that business, that's when you can see 20, 30, 50% attachment rates or buying percentages of that insurance because it's mission critical to that work.
That's right. Yeah, I can totally relate to that. I think about would I actively go out and find an insurance policy for my cell phone versus buying it at the point of sale when I buy the iPhone, right? So it's additional friction, it's additional thought. So I'll just do it here. Yeah.
Or if even think about how could be the next step that you don't even have to think about, right?
Right.
What if Apple, and you have the Apple Care as already an example, but what if they just said, your iPhone is coming with protection,
right?
And it's part of the product. And if anything, obviously Apple was already doing it as Apple Care, but that example can go now to different types of products. You see Tesla doing the Tesla insurance. So what if instead of buying a Tesla, you lease a Tesla, and out of the lease, $20 or whatever is the value, it's already added as insurance. You don't even have to think about it. The day you return the car, the insurance is gone. You don't have to call your carrier to cancel. They won't keep charging you if you forget. That's, I think, the beauty of embedded and really becomes, again, the feature. So suppose you're renting the Tesla, right? The product itself is a Tesla rental, but that comes with insurance, can come with your Sirius XM subscription. It can come with Tesla, some other add-ons that they may have. So that's really the magic when embedded becomes like a huge value added to consumers.
Yeah, no, that makes a ton of sense. Matheus, I want to pivot on you, man, because as I listen to you talk, I mean, you've got an incredible kind of understanding and perspective of the industry that you've obviously you've been around, you've seen the thing. Take me through the journey of a founder, man, because it seems like you've honed in on a problem, you've built a great solution. Talk to me about the early days and how you got to where you are.
Yes, so we were one of those stories where we're building the product that we wish existed in our previous jobs. So both my co-founder and I, we worked at Turo as early employees, and we got involved in insurance by accident, I guess, by like many people in the industry. And then we saw the power of Turo when it wasn't even called embedded insurance yet, but we saw a software platform like Turo getting really involved and taking advantage of insurance. And we were amazed by it, but we also saw how hard it was for us at Turo without the proper tools, software, without the proper know-how in insurance, relationships to actually get those products off the ground. And I was running international, so I negotiated insurance in Canada, in Europe, in Australia, and it always very, very hard to launch those things. So then we were basically created a product we hoped it existed. So there was a very kind of good connection. But as a founders, one of our main challenges, we realized, okay, the vision of this end-to-end platform to help others like Turo, it's gonna take us a long time to build, and I don't have the resources to build all at once because it requires a lot of software, services, licenses, and whatnot. So for us, the first 2 years or so were an exploration to try and figure out what is the smallest piece we can build, start adding value, and then continue to build the platform on top of that. It wasn't a linear journey.
Yeah.
We didn't really had a lot of trial and errors in the first 2 years or so, but at some point there was a little bit of the startup story of things clicked.
Yeah.
We got into Y Combinator, and from there we started to see our revenue growing very fast. And then we're like, okay, we are definitely now, and we're not coincidentally, this is when at some point we realized that the pieces we're trying to sell are too small. So it's almost like I'm selling the engine, and people are asking for the car,
right?
And then I go to most people are like, I cannot use an engine by itself,
right?
Build me the car, and that was when we realized okay, this product probably doesn't work at small components. We need to build a car. It might be a simplified golf cart to start,
right?
But it gotta move. It's gotta be turnkey, and that's when after maybe a couple of years exploring, that was the insight. And then from that, things started to accelerate. And then we started doing guarantee products to start because they're easier, less regulated.
Yeah.
That got us to certain levels, and then startup journey to a Series A. And then obviously we complement that with more regulated insurance products, which where we think the most of the future growth of the company will come from. But all I have to say is it wasn't a linear journey at all. It's full ups and downs and turns and walls. And as a founder, you just gotta be on it and break those walls and just keep going.
I'm curious though, Matheus, so pre-Series A, maybe even pre-seed, what was the funding model during all of that exploration where there's absolutely nothing going on?
Yeah, so that's a great point. So I would say we learned to be very capital efficient at that time.
Okay.
And there was a time, think about it, in our case was 2019, 2020, where being capital efficient was not cool. This is still the time that VCs are looking for crazy growth, don't care about margins and all of that. So we were a little bit weird for being capital efficient, but that's what was get us to survive. So we raised about $500,000, give or take, in our pre-seed round, and that money lasted 2.5 years because we started to do the basic things going to customers, trying to do 3-year deals and get paid up front. So we basically use our customers to finance some of that. But we definitely had, as I'd say, every startup, some really near death times when we had 3 months of funding on the bank. We were only 4 of us, so not very expensive, but it's still three months of runway, and we didn't know exactly how we would get it. And then you close a deal, and then suddenly there's some cash coming. So we survived and learned how to be capital efficient so that when things turned, and it was roughly around the time we got to Y Combinator, there was the opposite. We raised, it was so easy to raise money. Our seed round was 5 times oversubscribed.
Wow.
Our Series A was, was also relatively easy to raise. But then we didn't spend that money as we didn't scale the spend in the same speed. So that also allowed us to, as the market crashed last year, the year before, still be in a fairly comfortable financial position where we can make the investments. We can, obviously we want to move as fast as possible. As a startup, we have to grow very fast, but at least we can control a little bit more our destiny and how to make that happen.
Take me to that conversation, the 4 of you guys looking at 3 months of runway. What was that? What was that conversation like? What was that emotional feeling of near defeat?
Yeah, it's I mean, it's terrible. I won't lie, and I have to say that on top of this, my daughter she was born around the same time, and I had to agree with my wife that I would take a 2.5 month paternity leave because it would match her maternity leave, and we just have a couple equality as a very strong principle.
Sure.
And then I had not only to navigate those conversations, but tell my partner, and I was the only business person. There were 3 engineers and me, and say like, and by the way, I'm gonna be gone for 2.5 months. I'll tell you, it was not easy.
Yeah.
But again, luckily we had at least we knew there was a customer that was towards the end of the pipeline. So luckily he converted, and that was kind of what helped us push us through the next cycle, the next exploration cycle. But it was hard, and I think to me, what the lesson I learned at that point is, again, you gotta love what you're doing. You gotta have conviction.
Yeah.
Because those are moments that, unless you really care about, it's just not worth it, right? There's so many other easier options that you can think about as a founder. We're gonna pay you more. You're gonna work less. So you really need to believe that the world needs what you're building.
Right.
And then I think we did, right? Even back then, we were like, this product has to exist.
Yeah.
And it took us a while to start seeing that happening. But it's the same feeling that motivates me today when I look and still think about what is the future of Tint. And I still say that we're just scratching the surface, and that product should exist. Like, consumers should be able to experience insurance, to purchase insurance in a better way, which is the embedded version versus downloading an app that you probably don't care about, and having to interact with an insurance product like as a standalone.
Yeah. That journey, Matheus, fascinates me. Forgive me because I'm picking at the founder thing here. Your obviously conviction and that piece, that passion is table stakes. I'm sure you have an opportunity to work with lots of other founders, and especially being part of Y Combinator, you're kind of in a pretty nice network of individuals. What are some of the qualities and behaviors that you think you see that you would consider destructive to the founder mentality? Things that you would say that you would watch out for, that if you're seeing these things, this is not what you want in a founder.
Yeah, I think that there are many people that kind of follow trends and follow the hype. Yeah. I mean, again, I haven't spoken with many founders doing AI now, but I bet there are a lot of people who just jump the bandwagon and they just don't really understand or care. And I think that's when, like AI, like any other trend, again, we saw embedded insurance 2 years ago. I saw the machine learning AI 5 years ago. Whatever those the hype passes, there's a correction. Things get hard, money dries, and I bet that a lot of those companies won't make it because only the founders who really have conviction, who Y Combinator has the whys, right? Why you? Why now? As another word that I forgot. But the point is, if you don't check those boxes, and the why you is like, you never did anything in AI. You do not understand the technology. You have absolutely no differentiator versus what Google and others can be doing. It's like, you probably shouldn't be doing that, right? So I think the number one factor, and I went to business school, and this is it's some like a trait that is sometimes common in business school students. That they just chase the next shiny object.
Right. Yeah.
That I think doesn't work for founders, because when things get hard, you probably don't have that kind of the grit, the passion to stick, and then they're gonna look back and get a McKinsey offer and then call it a day.
I love it. That's super helpful for me to think about, and because obviously I've talked to a lot of founders, and I never know whether or not I'm talking to someone who's got really something, and so even I think about it's like, well, why is this different? Where is your expertise in this whole thing? So I love that as a little bit of a filter.
And it's and I would say the positive characteristic here is grit, right?
Yeah.
Because if the person, like, if you have the passion, if you really care, and you are well qualified, well positioned to do that, and you have the grid.
Yeah.
You can wait as long as it takes, right? Because it goes back to you look at a mirror and you ask like, what could I be doing now? What do I want to do? And as long as the answer is like, I still want to do this, that's where you get, and going back to your question about how did you guys go through this at least couple of years that were very turbulent, and that's the answer. We look and say that we want to build that product. We believe in it. And I think as long as the founders have that, they can weather the storm. They can wait. They can stop paying themselves salaries, do whatever sacrifice, like we did back then, and do whatever sacrifices that you have. And if you don't have that, the first bump in the road probably destabilizes you, and then it's hard to continue.
Yeah, no, that's fascinating. That's fascinating. So Matheus, let's close on this. Your crystal ball, man. So we're here surrounded by lots of innovation, and your product is obviously incredibly innovative. How do you keep innovating? What's next? What's on the horizon?
Yeah, for us, what is on the horizon is definitely continue to expand our platform to new use cases. So we believe our platform should be the infrastructure that powers any embedded insurance case. We already have over 10 different use cases of P&C insurance in our platform. So we already proved that can work horizontally. But for us, the next is to get dozens, hundreds of different use cases.
Right.
So that's going to be a big area for us. And obviously the other one, as we talked about, it's AI, right? So how can we continue to deploy AI or accelerate the deployment of AI tools? We see that more as a way to increase the efficiency of our platform. We don't have right now anything that we think we're going to completely transform the ways we do, but we believe we can get much better, much efficient by taking advantage of those innovations when it comes to Gen AI, and then especially on the services side of our business.
Fantastic. That's awesome. Matheus, this has been an incredible conversation, man. I can't thank you enough for coming up and spending some time with us, investing. I know you're super busy here at ITC, so I really appreciate the time.
No, thank you so much for having me. I really appreciate it.
Thank you.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.